Coming up on the SBS On The Money podcast, the Australian share market resets a record high. The Australian dollar at a near 7-month high against the US, and the rise of the Labubu. If you don't know what it is, we'll explain next. Hello everyone, it is Tuesday the 10th of June 2025. Later in the podcast, we'll take a closer look at the rise of the Labubu, a plush toy designed like a bit of a monster. We'll tell you why it's going crazy during a cost of living crisis. But let's focus our attention on the share market right now, because the S&P ASX200, after hitting a recent low back in April, has surged 17% since then and is now at a record high, closing at 8,587 today. That's an increase of 0.84%. To tell us why and where to next, I spoke with Jamie Hanna, the Deputy Head of Capital Markets and Investments at VanEk. So it's up 17% since early April after the big falls following Liberation Day. Does the speed in which the market recovered since then surprise you?
Yes, I mean, let's be honest, the speed is obviously surprising to everyone because it really assumes that those Liberation Day market turmoil, which was driven by US policy, essentially hasn't happened. So if you actually think about how the market's working, it's really pricing in that the trade and the tariff war is going to rectify itself, that the global economy is going to go back into a strong growth phase over the coming years. So this bounce back is a surprise. Is it preemptive of what's going to happen in the market? I think it's too early to tell. But right now, it's pricing in the solving of all trade war and trade tariff issues.
So what exactly is driving it higher? I mean, are the gains broad-based? Is it the larger caps, for example? Because we know the Commonwealth Bank in particular has really been driving the market higher. It's now a $300 billion market cap company. And where is this money coming from? Is it local investors or are international factors at play?
So if we look at Australia more broadly, we know that Australia is really, overweight towards banks and financial companies as well as big resource companies. And realistically, since the start of the year, BHP and Rio, some of those big mining companies, have underperformed. So they're slightly negative for the year, but that's been offset by gold mining companies in Australia. So realistically, the Australian market is quite a broad-based rally since the start of the year. There's no doubt that what we've seen isn't just one sector, it's across all sectors. And look, where is this money coming from, though, to prop up the whole entire Australian market? Well, there is some buying from offshore companies into the Australian market, but it's not in large volumes that would influence the market. I think what you're seeing is a lot of institutions at the moment are really sitting on some form of excess cash, waiting for opportunities in the market. But who is fully invested? Well, that's our industry super funds. It's our self-managed super funds. It's the Australian investors who have a pool of money which needs to be invested, and a lot of that goes into the Australian market. And I think you'll find that's some of the biggest drivers of the movement in the ASX since the start of the year.
And so when we're looking at the market today, up almost 1%, right? I'm assuming a lot of it has to do with optimism about this US-China trade deal, a second day of negotiations in London. What exactly is the market expecting here?
Yeah, look, today has seen banks strong and financial companies strong yet again, as well as energy companies, right? And a lot of that is blatantly linked to what's going on with the US economic policy. And that ties in today completely to the US and China discussions which are going on. Everyone is focused on that. Yesterday was their first day. The feedback was that it was fruitful. And I think the market is really just pricing in positive developments on that front. And so there is expectations for a normalized trade, and realistically for the US and China to come to an agreement which is pro-growth for the market.
And how's all this flowing through to the currency markets? Because the Australian dollar has been steadily rising all year, and today I think it's reached a 6 or even a 7-month high against the US at above 65.
Yeah, the Australian dollar is over 65, as you've pointed out. And realistically, though, it's not to do with what's going on in Australia. What is going on is that the US dollar is weakening against most other currencies. So if you look at the Australian dollar against, other currencies in the world like the euro, the Swiss franc, the pound and the like, we haven't seen the same amount of growth that we have against USD. And that indicates that the USD is weakening against the Australian dollar as opposed to Australian economic conditions changing. Now, all of this, USD, AUD, it's really just linked to interest rates. Interest rates in the US, their bond yields, and how the economic policy influences them. So it's really hard to determine how this is going to play out and what's going to happen over the coming months. But I think it's probably fair to say that right now, you're certainly better off if you're going to the US than what you were a number of months ago.
So given what we're seeing with the market now at these record levels, what are you telling your clients at the moment, and are there still opportunities? Are you optimistic that the market will continue to climb?
I think you always have to be, looking at the market in an opportunistic way and thinking that there are always, advantages to buying and value in the market. At the moment, clients are looking for value and they really haven't found it in certain areas. So what we're finding is it's just broad-based. So where were some of the pockets? Well, gold miners, we've been pushing them for a while and saying, that the gold price has really been pushing ahead really hard, but the gold mining companies haven't kept up. They've had a really good run, but there's still probably some growth in that area. There's also a little bit of growth in the office property area. Certainly a lot of buildings at the moment that house office has been undervalued. Whether or not that will bounce back, it's still up for debate, but they're certainly undervalued compared to where they have been. But in this type of environment, you don't really want to be sitting on too much cash. Otherwise, you'll be, underperforming if the market does well. So what we're advising clients is that they should have a well-diversified portfolio across as many asset classes as they can. And then what you will able to do then is, actually capitalize on any growth in the market and hopefully limit the downside in case there is a fallout from some of the trade talks and economic policy.
Okay, that is Jamie Hanna there from VanEk. From the share market, let's go to the toy market, because have you heard of the term Labubu? It's a toy monster-like creature which has gone viral online and transcended to the real world, with fans spending anywhere from $20 to maybe more than 100 for these plush characters, which have become status items despite the cost of living crisis. And these things are often sold in what's called blind boxes, which means you don't know which toy you're actually getting. Why? And why the craze? For more, Tys Ochiuzzi spoke with University of Sydney marketing lecturer Dr Christina Anthony. So it's
a big craze at the moment. It's a big craze at the moment. I think a lot of it is being fueled by the current climate that we're in terms of the economic downturn, the cost of living pressures that are currently in place, where consumers, they can't afford to be spending money on these larger expenses like big trips and holidays. And so in that kind of climate, they tend to shift their focus to smaller feel-good purchases. And that's where the blind box culture has exploded, because it gives consumers what we call this affordable luxury and the ability to feel excitement and novelty and status at an accessible price point.
Amazing. And then how much of a role does social media play in the marketing of these toys?
It's huge. So I think with the culture of the blind box, it's not just about the ownership, it's about showing other people that you own one of these cool toys. And so there is this big trend of what we call unboxing, where a consumer will go online, they will unveil and open up their creation, and so they're able to show others what they unveiled, what they found, and whether they got one of the rare collectibles. And they're also able to display their emotions to other consumers, their excitement, the anticipation that they feel. There's a reward that the consumer also receives, because when they unveil it in front of everyone, they get what we call this form of social proofing and social validation. And that's really important to younger consumers because they value the influence of their peers and the recognition of their peers. So going online and unveiling and getting part of this blind box process kind of signals to others, hey, I'm a fan of this and I'm cool and I'm on trend and your opinion matters to me.
Absolutely. And then you mentioned at the start that this is sort of a way of meeting that sort of cost of living crisis where people can't afford to go on holidays. But I guess there is still a cost to this when you're buying so many of these toys, you're trying to find that one rare color. How are people sort of navigating the cost of living crisis to keep on purchasing this?
I think we tend to think of it as consumers as a unit price. We're not calculating the overall cost. I think if a consumer did sit down and think about how much they were actually spending on this, they might get a little bit of a shock. But it's kind of like a point-to-point purchase where you're thinking about that immediate acquisition of that product and how that's going to make you feel. And you're probably not considering the aggregate cost that is involved.
Would it be too much of a stretch to sort of compare this to, I guess, gambling, where you're taking a risk to buy this mystery box in the hope of getting a rare toy?
I don't think at all it's a stretch. I think it is very similar to gambling in terms of how it works on the brain's reward system. So it does create that intermittent reinforcement. As I mentioned, you're only getting the rewards sometimes, not all the time. So it becomes a form of addiction, if I dare use that word, because you're not sure if you're going to get the payoff that particular time. So that's what keeps you coming back for more.
I guess my last question was around whether this could just sort of fall out of fashion and people are left with these toys that are no longer trending. Is there a danger that could happen?
Yes, it's a craze right now, but it could also become a fad. And so it's really important for marketers to make sure that if they want to extend the life cycle of these blind box products, that they are introducing new characters, that they're leveraging on cool collaborations, maybe tapping into nostalgia, because novelty fatigue can set in. And if the consumer does get bored, then it does have the potential of waning, but I don't see it happening anytime soon. I think there is a real kind of trend driven by the novelty, and as long as the brand can evolve the narrative and deepen the emotional connections and really build on that social media participation that these crazes tend to evoke, then all those experiences are going to be much more important to the consumer, and they are sustainable over time.
That is Tys Ochiuzzi speaking with Dr Christina Anthony from the University of Sydney. Don't forget, if you do enjoy the podcast, to give it a rating or a review on Apple Podcasts and Spotify, and to click subscribe.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.